we're looking at right now is Apple Computer. And we use on Apple Computer, we use the monthly triangles for trend. Okay? We use the weekly triangles for timing. It's really that simple. And as you came into the year, this year, into 2009, the trend, or this monthly triangle, was actually red pointing down. And we had several trades earlier on until the monthly triangle turned green right here. Now, we've had some feedback already on the triangles, but we're probably going to make this into a black M so you'll actually see it closer. But all of these trades actually produced a loss of $18.59. Okay? Not a great or auspicious start to the year. However, that's what it takes when you're trading the market in this type of format. The next trade we had, which is a buy right here, and an exit on the red weekly, was a $30.93 gain. So that automatically puts us up about $12 for the year, and we're only in July right now. We get back in on a weekly green. Remember, a monthly green and a weekly green make a match, means you want to be a buyer. So the market moves back up. We get out at this level right here, 196.26, which is right here. And you can see that produced a gain of $51.70. So here we are. We have a total of 4 trades, basically 4 trades. Now, if my screen refreshes, I have nothing to do with that. It's all part of the Market Club service. It just refreshes to get new quotes for you. 4 trades. We have 2 losses and 2 wins. And basically that produced a profit of $64.04. Now, if you look at in terms of percentages, that was a 70% return. And that's just following the triangles. Now, at the beginning of the year, did we know that Apple was going to have a move from close to 100 to over 200? No, we didn't know that. Nobody knew that for sure. But if you trade in big liquid markets, that's a key thing. Stay away from these very thinly traded stocks because, quite frankly, they're manipulated and they're going to cost you money. But when you stay with the big markets like Apple, Amazon, all the big markets that have big volumes that trade in the millions of stocks every day, they're the ones to stay with. So using this approach, our monthly for trend, okay, so use the monthly trade triangle, that's for the trend, and our weekly for timing, then chances are you're going to make money. It's a very high probability because you're not guessing, you're following a defined game plan that has proven to be successful, not just in 2009, but in 2007, 2008, and before that. This is like the DNA of the marketplace. It tells you what to do, when you should do it, and there's no guesswork. There's no, well, gee, I heard someone on CNBC talking about this, and Apple's going down, and Apple's going up. If you just follow the triangles and nothing else, you'll make money. I am very confident of saying that. So that's our approach on stocks. So every stock that we look at is basically on the monthly for trend and on the weekly for timing. It's pretty simple. Now, I don't know what's going to happen to Apple Computer, but this looks like it's maybe turning around, but certainly we've got one piece of the puzzle in. If we get a sell signal, which Apple Computer would probably have to go somewhere below 180 for one of our monthly trade triangles to kick in. If that occurred, we would want to be short Apple Computer. As much as I love their products and love Steve Jobs, I would want to be short Apple Computer. So, Susan, do we have any calls?
I think we may have a question from Al. Al, do you have a question?
Yes. When do we know whether to use the monthly or the weekly as a trend indicator? I noticed in gold you use the weekly, but in equities you're using the monthly.
Al, thank you for your question. First of all, let me just say this. In the golden rule, the rule we use generally here is in equities, all stocks, you want to use the monthly for trend and the weekly for timing. once you get into dailies on stocks, you're going to be doing far too many trades or probably make your brokers very happy, but it's not going to make you the kind of money you want to make. So I would stick to just simply the monthly for timing, for trend, and the weekly for timing, getting in and out of the market. Now, the next example we're going to show you actually addresses another approach, which maybe if you're a conservative, super long trader, you can use this approach as well. And I think this is what a lot of people are doing. We use this in our perfect portfolio. But as I said, I had a post today I put up on the blog called "It Doesn't Matter," and it doesn't matter what you think or what I think. It's what the market does. And the reality is the market has, in many cases, a mind of its own and anticipates months in advance what's going to happen in the real world. I'm not sure how it does this, but it's done it consistently since we've had markets pretty much. But the reality is when you get a signal on a weekly to get out or get in, and more importantly, when you get a signal on the monthly trade triangles, you want to basically go with the direction of that monthly because it's very, very important. That's a major shift in the thinking towards that one market. Thank you for your question.
And I think Jack has a question. Jack, do you have a question?
Yes, I do. Well, not a question so much as a comment. As I understood it, you were using the dailies and the weeklies on gold just to illustrate a short-term strategy. You could use the dailies and the weeklies on anything if you were using it as a short-term strategy. You're using the monthly and the weeklies on Apple to illustrate an intermediate-term strategy. Am I correct?
Absolutely.
I think that was the fellow's question about gold. It wasn't so much that you were using dailies and weeklies because it was gold, but you were using it simply to illustrate that it was a short-term strategy. You could use it on anything, whether it be a stock, an ETF. If you were looking at a short-term strategy, you would use daily and weekly as opposed to weekly and monthly.
Well, yes and no, and let me clarify that. It depends also on what type of trading you do. What type of trading personality do you have? Some folks I know trade for excitement, whether that's whatever it is, but some people trade, they're more patient, they're longer term, they're willing to sit through setbacks, and others aren't. So I think it really depends on how you trade. The illustration I showed you on gold was basically to show you an approach we think it works. I mean, we think for futures you want to use the weekly and the daily for trading. I think futures are more short-term related simply because the leverage is so high in futures. For stocks, I think stocks tend to move in a more, even though stocks historically, if you look at the percentage moves in stocks, they're more volatile than futures. What makes futures so exciting for a lot of people, and I grew up in the futures area as a member of several major exchanges, is the leverage involved, because you only have to put up maybe $1,000 or $2,000 to control maybe $100,000. And that's very attractive. Now, we often get asked, too, we talk about deleveraging futures. Well, it's not difficult to do with the deleveraging a futures contract. All you have to do is put up more money, and you deleverage yourself in that particular arena. But to answer your question, yes, the trade triangles are very, very fluid, and you can use them in different ways. And we encourage people to find what type of trading you are, what kind of trader you are. We can't necessarily do that for you, but when you do find what kind of trader you are, you'll be very happy and you'll be very successful using the trade triangle.